Hello, everyone. Welcome back to a new episode, a new week of Decoding Markets. Welcome back, sir, to a new episode.
Happy to be.
I'm very sorry for the technical glitch. That's the reason we are delayed by 10 minutes today. Um, yes, I'm very sorry for the delay, sir. And let's start with a note. So, welcome back, sir, once again.
Yeah, pleasure being here. Let's kick it off.
Right. So, welcome back, and this is decoding markets. Okay. And that's too in three moves. So here we will be talking about directly what is happening in the markets and how to get out of the traps, or are they like any traps which are waiting for us in the markets. So let's decode it. So what's your opinion on this week? It's a fresh start.
Well, a lot of hope after a big decline that has lasted for 6 weeks consecutive. Something resolves itself at this point of time. But in this fall, we sort of broke certain levels and went into a deeper momentum correction, which leaves the door open for some more volatility before we are done. So I'm not absolutely sure that it's done and dusted, though I admit that all through July I kept thinking that at various points, which turned out to be wrong. And now if I sound a little cautious, it also sounds wrong. But yeah, I'm just not sure. I think waiting till the end of August or sometime in September maybe good to allow for certain cycles to complete, and only then maybe we will get a clearer idea of where we are and how ready we are to take off. The eventuality, of course, I'm certain. I'm certain of one thing, that we are eventually going to take off very sharply to the upside. The only thing between now and then is that we are still going through this pain period of positive versus negative news flow.
So talking about the noise in the market that you just said. Same, let's talk about a instance in the market, and that too a month map. So in July, the market has fallen 1300 points and it bounced back 600 points from the bottom. Is there any indicator that could help us to capture these moves, or can these moves be traded?
No, definitely it could have been done. It all boils down to what you're looking at and what are you giving more importance. So I'm just going to switch to strike just to get a sense. When we go to the charts on Strike Money, what we've done is we always have the trade setup on the right hand side, and we have all the data points from that setup on the left hand side. Now it's very important because it then allows you to swing through where the trend changes were really happening. Now, when you say that, okay, is there an indicator that really captures a large part of the move? I would say yes, that's the RMI, because the RMI is designed to go faster than the MACD by a couple of days, and by giving more weightage to the uh, just the way that it uses the underlying data. Okay, so uh, we smoothen it, we speed it up, we try to get faster signals. That's the main point, and then it works across time frames. So now just looking at July, so you see on the left hand side, more than just looking at the chart, we simply look at July. Where did the sell signal really come in? And it's on the 4th of July, back here. This is where the new sell signal showed up. And then after that, it remained in sell throughout this time period. Also note the Dow trend. The Dow trend is the classic higher high, higher low pattern. And this turned down a little faster, 2 days ahead on the 2nd of July itself. And then after that, you got the RMI sell signal, and both are now in red from 4th of July onwards, all the way till much further away. The Dow trend did reverse a little bit around 23rd, 24th July, but the RMI remained in sell all the way till the 8th of August, and only after that we have a new buy signal. This new buy signal has been around for the last 5 days, and therefore the first 3-4 days it was looking like we hadn't made much progress. But today we finally did spike up, and we've retraced very quickly 50% at today's high of this entire fall. Okay, the next resistance is close to 61%. Will we get to 61 or not? That needs to be seen over the next day or two. 61% being closer to 25,160. But that is the upside that I see in this bounce. But coming back to the main point, the use of the RMI indicator would have been pretty useful in capturing this move. If you simply looked at the daily RMI signal, you would have been sort of with the trend this time around. Now, I know some people will simply jump and say, yeah, but you were talking about sentiment indicators and the swing and all that. So there is a time for everything. Everything works in a certain way at a certain time. If I have to highlight importance of tools and indicators, I would put wave analysis and RMI study first, and use sentiment as an overlay. So that is what I would do. And therefore, if the RMI is in sell and if we get an oversold sentiment reading, yes, it can mean that you get a bounce back. The judgment call is whether the bounce is going to be 1 day, 2 day, or whether it's going to be a prolonged bounce. I think that is where the call goes right or wrong. But you typically get a 1 to 2 day bounce in any case on overbought, oversold readings on the RMI. Okay. After that, whether the trend prolongs or not is a completely different question. So even today, just for insight, the swing itself has hit 92%. Okay, 91, 92%. That's a pretty high reading. Okay, the last time we probably seen it somewhere here, and then we've seen it here at these peaks when the swing started to drop from there. So at 92% reading, you'd see in the next day or two somewhere the market's gonna pause a little bit. Whether it reverses from there or continues higher is the call that you have to take.
So being 92 is a pretty high reading, and this actually makes me to come to my second question regarding today's market. So in today, the market has up with 300 points. But from a macro perspective, do you think is it a trap, be it bullish or bearish, anything? Do you think it's a trap?
So the question takes me back to the RMI. How do we really determine whether something is a trap or not? It's not an easy question. We discussed this once before. At that time, we took a very different perspective and approach, because at that time we were discussing this fact. Let me go to a bar chart. We were discussing this thing when we were doing breakouts. Okay, so when we do trend line breakouts like these, a false breakout is essentially when you go above the line and then you go back below it. We also discussed it, I think, over here. I think this is the first time we discussed it, when it went above this line and then went back below it. So these end up being false breakouts, resulting in a retest of the point from where we came, except that this took very long to happen. Now, having said that, how do we know whether this is a false breakout? Because this is now not inside this pattern. Okay, it is coming from maybe a falling channel for this entire fall. So you've sort of broken out of this. One thing we can say, okay, if it falls back into the channel, so that is one simple way. But if I use the RMI, which we are really talking about right now, sometimes it might give us a hint. And that hint can be in the cycle itself. So here we are looking at the weekly RMI instead of the daily. And the reason I'm doing that is I'm trying to look at where are we in the weekly cycle. So what ended up happening is that the weekly RMI gave a sell signal somewhere here. Okay, prices did fall. They've bounced a bit. But what we say is that the RMI often completes cycles unless it is trending in nature. Trending means it is extending on the upside in a bull market. If it is not doing that, it will usually, or even certain subdivisions within a bull market will come back to the zero line whenever it corrects or pulls back. So we really have to watch out for, is it going to come back? Is it going to come back here? And if it is, then we haven't done that yet. And for that, you either need time or you need price. Time means that market does nothing like this, gives it time. Or second is it dips further towards the lower Bollinger Band here, and then from there it picks up. So one of these two things indicate that whatever move may happen in the short term whether it consolidates or falls further could end up looking like a false breakout from the channel that we just discussed on the daily chart. And that is simply because the weekly RMI is in sell. Now, this is not a 100% guarantee, but it gives you some probability, that this thing is probable. And therefore, you have to be open to that risk on the daily chart when we're actually studying. We have to be open to the idea that what if this ends in 3 waves? Okay, and it's happened before. This on the hourly ended in 3 waves. This also ended in A, B, and C. This is slightly bigger, so we really wonder if can it really end in a counter trend bounce like this and sell off. So that is something we have to be aware of, careful of, and watch out for. Because if it shows you signs of giving up from a higher level, then you have to accept that it ended up becoming a false breakout or a trap. The weekly setup is just telling you that a risk of such a trap does exist.
Okay. It might be one. It's so. So am I audible?
Yeah, you're audible. Go on.
Yeah. So it might be a trap. It might not.
Yeah, we'll
But
see.
most probably the indication is on that verge.
I mean, we'll keep it open. That's the point I'm making.
So this leads us to the final question for today's episode. How does Strike.money helps investor to gain an edge and how it is different from other platforms, sir?
So I think quite some time we spent on the RMI, which is one form of edge because it's a unique tool indicator that I've created and used for almost 3 decades. So it's been time tested, not just by me but various teams that have worked with me over time. So it's gone through all of that and with good results. So being able to use that in the form of a scan where you can actually scan stocks that are in different stages of the trend on various time frames and combine it, look for something which is bullish on daily and bearish on weekly, or look for something that is bullish on monthly and bullish on weekly, whatever combination depending on the situation, because the market presents us with different types of situations each time, and then you want to find out stocks that fit that combination based on where you are, and you can create that combination over here and you can get that filter. So that sort of reduces your work significantly. So the whole idea of Strike is to create tools where the work that you need to do can be done very, very quickly and efficiently and saves you time. So in this way, like I scan and immediately find 3 stocks, within seconds, I can just change the basket and it just shows up. Like moment I click this, there you are, you have a result. Add indices, I get a result. So I get results very, very quickly, and that's, I think, a big advantage of using Strike on anything. You just saw the speed at which scans are showing up. The same way on everything, whether it's heat maps, sentiment indicators. Now, sentiment indicators are also unique because I don't know any other platform that carries them. And there are various types. They're across time frames, whether it's daily, weekly, monthly, quarterly. And they're useful to investors because investors essentially looking for medium to longer term views. If they can just sense that, see, if everybody's bearish at a certain point of time, you should be bullish, or they're bullish, you should be bearish, and you should be searching for ideas. So if I look at domestic institutions that have been bullish since April and are not giving up their long positions in index futures, I would say that's sort of broadly indicative that you should be buying and investing in this market over the last 3 to 4 months. And it would have paid off if you did your stock selection right, which means you didn't end up buying IT stocks, which are not my favorite anyway, since forever. But you bought the right things, right? And there are ways to get to the right things by using certain types of scans. Like we've taught people how to use the technical scans with averages, using the look back to find winning investment ideas that are outperforming. And you do those kind of things, and you can do it very, very quickly by setting it up in a certain way that this is the list that should work. And then within that, of course, you can do a further overlay of fundamentals and further verify these ideas and narrow down your list or choice. So being able to do these things quickly, efficiently, and reduce the amount of work. Like when I used to use Metastock software, which costs a lot more than strike, it's like almost 50,000 a year now. Earlier the Indian vendor used to give it for, used to buy the software for 50,000 and then pay 15,000 a year. Now it's like you'll have to pay only 30 to 50,000 a year just to get the data feed. And then in that I would have to create an exploration to scan all the stocks based on parameters. You had to know the metastock coding language to write the filter or to write your own indicator. Here everything is done. Like it's just click. You want to do this, click this. You want to do this, click this. No coding required. That's in a sense, I think I've summed it up broadly what we've tried to do. There are many tools across segments, from futures, options, RRG, etc. But the idea everywhere is to make it simple, make it click and go. The user interface should be user friendly and should be efficient in getting work done without somebody having to learn anything at all, except just basic idea what do you want, that much you have to learn. But apart from that, the platform should do all the work for you. That's a long talk.
But that was informative, sir. That was the entire information that everyone wanted, starting from the basic to the advanced level, everything. So that's for all.
And it's work in progress. I mean, see, to people who think we have taken a lot of feedback, but we spent quite some time, 8-9 months. There's been a lot of time overrun because we promised that we would have certain combined scanners between technicals, fundamentals, and all that available sometime back. And there are many other things which we need to improve to get the experience based on what feedback we've gotten from people. But it's just taken time because of wanting to clear out bugs, move towards real time, 1 minute real time data feed. So we are taking our time so that we get to the best place that we want. But we are definite that this is going to be better than anything people have seen anywhere in the market. I'm sure it will end up being the best place to get work done.
Yeah. So that's all for today's session. So let's get to the questions asked by the people here.
Yeah.
In the live. So starting from Lost Trader.
I'll not give a stock specific view. No. It's a related question. He's asking, like, without Reliance, can the market move?
Yeah. So this is from
throw light on specialty chemicals as a sector, large cap to small cap have fantastic RS strength. It is exempt sector or due to contract based business model. I have actually, you can say, not studied it, missed out on it, not been part of the chemicals sector bull market. But I do know that over the last 3 years, 4 years, these companies went through a long consolidation phase when they were slightly overvalued. Now, has that overvalued situation become undervalued? We don't have a chemical sector index. We haven't created one yet. But if I look at individual names and their valuation charts, maybe we can get an idea which are the popular like Deepak Nitrite, for example. If I just open a valuation chart, okay, so I'm just showing a chart. We're not really giving an opinion here. Let me go to the strike valuation charts. Has fewer spikes in the data. Okay, and when I go to maximum, now here I'm going to max on an EV by beta. Okay, so this stock, while it's gone nowhere over like 4 years, the question I would ask is, have the valuations gone down or up? Here they went up. Okay, now of course prices went up a little bit, but that shows that when would valuations go up if prices go nowhere? It's only if earnings are deteriorating. And what you would have liked in a time-wise correction, like we've seen in banking sector, is that valuations would have dropped at least to the median, if not lower than that. Right now, they are still above one standard deviation. So it doesn't really, the valuation is not reached a great place. That doesn't mean it can't go up if earnings growth comes back, which I don't have a view on. But that's the only thing I thought of, that for a sector that has spent so many years sideways, we haven't seen the valuations come back to the median or lower than that to make it super attractive. That is the only observation. And I think probably this observation may fit across the sector. I've just taken one example. I don't know which other one to take. But yeah, that is. I don't know if you can see my screen. Am I just talking away?
So yeah, the screen is not visible, so I haven't shared your screen.
Oh, my mistake. My mistake. I'll just share it. I was talking with my screen open, and I thought, here.
So
So this is the valuation chart of Deepak Nitrite on strike. EV by EBITDA historical from 2016 onwards. If you do standalone, it might have more history if the price has history. Yeah, it has all the way to 2002. So it's sort of valuations have grown with the company growing over time. They've just never gone down. And so I don't know. I actually don't know how this works. So the only way valuations remain elevated and stock prices keep rising is if growth remains strong. So that's a call you have to take, or you have to see the numbers. Is growth back? Does it support this level of valuation? That's the very, very simple question. So if we go to fundamentals, we can actually see. I think on the summary, we can actually see the competitors here, right? Like some people may say, okay, then go and look at Navin Fluorine, or go and look at. Navin Fluorine is one popular stock. So let us see the historical valuation chart. Let's go through strike valuation setup. Max, EV by EBITDA. It's also up there. Prices have started to rise here. So I know. So it happened here also. Here also prices were rising. People started to anticipate kuch naya hoga. Then it dropped off. Again, it is starting to rise. So then I wonder, is it only rising because stock market is going up? Or is there something to it? Now, in this case, at least I see something here. I see that this valuation is slightly lower than it was at the previous peak, even though prices are higher. So that means there has been some growth along the way. Now it's a judgment. Can you get the same kind of growth rate you had here, which drove it? Because that's what people buy for. What back there at the starting point, the valuation was here, whereas now it is here. So yeah, I'm just sharing observations. We cannot give a view on it as to whether it will happen, not happen, what will happen. But I'm just telling you what you need to think about. You need to think about the trade-off between valuation and growth. That's it. And can you make a prediction that growth is back? So enough time spent on chemicals. Next sector. Next question.
yeah. So then, next question is from FMCG sector, sir.
So it is a sector. Consumer durables, he's saying, not consumer goods, not FMCG durables. Again, not a sector that I have tracked very closely. There is a CD index on BSE. It used to be there. I don't know if they've killed it or not. Not a very interesting chart to study. So I don't know.
So
I'm sorry.
moving.
I wish we could know something about everything, but that's just not my way. Like I have my favorites.
Like IT is not your favorite. That we all know.
Absolutely. And not even FMCG. I mean, FMCG is good. It will go up, but it'll go up less than everything else. So why won't? I mean, I'm very clear about that part.
So next question is this is also sector.
So the USD INR has weakened along with a weakening market. Okay, and we are almost back to a potential double top in the USD INR. Okay, again, I don't know if you can wait. Let me share my screen. This again, it will go weird. So now when we are looking at USD INR, almost a double top with what we made back here around 87. We've made a gain here. The RMI has gone into sell, and we are at the top end of the channel. So what I'm really thinking at this moment in terms of wave structure is that this is a big ABC up, and this was a big ABC x ABC down. So it's like a larger A, larger B so far. If that turns out to be true, we should do 1, 2, 3, 4, 5 larger C down back to this level. Okay, this is just the thought. So it's a regular flat, not an expanded flat. Of course, if this is depending on what the long-term wave is, it can even become a triangle like A, B, C, D, E. That's a different thing. But I can't say that right now. I'll go with the flat for the time being. So I think it has done a double top near 87, 88 basically, almost 88 it touched both here and here. And the RMI has turned negative. So we may have started wave C down of the larger correction. I should write about it. I haven't written on this.
So got a new topic.
Yeah. Just.
So moving to today's last question. It's for SP Sharma.
Go on.
Yeah. So at what level on the upside will you call it a resumption of move up and not a counter trend?
Yeah, it's usually a tough question. I would ideally want the weekly RMI to turn bullish and all that, but the way it is down, by that time it's too late. So one level where we can put a cutoff, not 100% cutoff, but a cutoff is the 61% retracement. That's around 25,160. Okay, so beyond that we can try and say, okay, fine, maybe it's done. But that's just a maybe, because see, you can never be sure. You can always think it will come down, and it may never come down. So there are two perspectives. One is investment and one is trading. The investment perspective is that if you're buying stocks throughout this period, the good ones have done well anyway. Some are even making new highs for the last month. So that's so the investment perspective, if it is a larger bull market, doesn't change, and therefore it doesn't matter. But in trading it does. Should you give up at 25,300 or 200, and then will it come down? So these things have to be done in real time, because in real time I need to determine that yes, this 3 waves up is complete and it's giving me an opportunity to short, and if it goes wrong, then I need to accept that okay, it's wrong, and we turn bullish because it became a 5-wave rise. Not able to do that in sometimes we can anticipate that, but the reason we are not anticipating it is that the weekly cycle is incomplete. I mean, it's as simple or silly as that. Otherwise I would have said 3 has already started, as I was trying to do some time back, but now I've sort of taken a step back and said let's give it some time. I know the answer you want is कि इसके ऊपर ये उसके नीचे ये, but I don't function like that. But when you're trading, you need a stop loss, which would always be 61.8% retracement to any bearish view on the market. Above 26160, you usually cannot, or even 70 till the upper Bollinger Band. You can wait. After that, you don't know. After that, you could be wrong on the bearish view. So therefore, you have to have a stop somewhere, or you have to have a point of contact somewhere. Right now, even whether the bounce is over is not clear, because the daily RMI is still bullish. So it's not like it has to fall tomorrow. It could take another day or two.
So that's all for today's question, sir. That's it.
Yeah.
So there was one question that I want to address. It's regarding, it's from Mahesh Paime. It's regarding the 11 a.m. live sessions that we used to do on our social media platforms. So there's a technical glitch going on. There are some bug fixes on the back end. Once the bugs are like the issues are resolved, we will be back on the track with the 11 a.m. live.
Hmm.
Yeah. So that's all for today's session. Thank you everyone for joining, and it was a good session. Thank you, sir.
Thank you all.
Thank you.